record. Okay. Welcome everybody. So let me just give you a quick Zoom tour for those people that aren't familiar with Zoom. So in the upper right hand corner, you'll see speaker view or gallery view. If you can leave it on speaker view, that would be amazing. And then you'll see the face of the person who's actually talking at the time. I've muted all the mics except for the people in the panel. And we are recording this. So your face won't actually show up unless your video is live and you're talking. So if you want to stay anonymous, that's great. And then there's also in the bottom middle, there's a chat button. So, so that's a great place to ask questions. And we have our first question. So yes, we are actually recording it, and then we'll send this out later as well. So hopefully that helps. So I want to quickly introduce the group. So today we have myself, Paul Haley. We have Jeff, Chris, and Pawel. We all work together. Did I say it right?
You got it.
We are, and Jordan's here also. He's feeling a bit under the weather, so we are all real estate agents and we work together. And the main reason we work together is we're all experts in different things, and you know, we sort of feel like we are one-stop shopping and we can help people with everything. And then also here is Ruth from Outline Financial, the amazing Ruth. She's going to answer lots of great questions about mortgages, and she helps us out and saves our bacon all the time. Like last night, she saved my bacon. Thanks for that. We didn't get that property, by the way, Ruth, so unfortunately. Okay, so for the people that just joined, if you have questions, just type it in the chat below in the middle box. Yeah, and I guess, you know, we should also say that we put this together because really these are difficult times. These are tough times, and we're getting a lot of questions from clients, and we thought, you know, how can we help? And one of the ways we can help is, like, let's just share our thoughts and knowledge and experience of the team with everybody. So that's why we're hosting this, and I think the plan is we'll probably do this once a week as things come up and as things change. Okay, so let's dive right in. So I guess the first thing is we want to talk about what's happening in the real estate market. And to do that, let's start with thinking about, is this a good time to sell? And, you know, what I'll do is I'll ask Pawel, you know, really what's happening with some of the sales that you're conducting right now, and how, you know, how are you doing that with the social distancing?
Yeah, Paul, great question. So I'll give you one example in particular. So I have a client that owns several investment condos in Toronto, and she's looking to mitigate her risk against possible downside in the future. So she's looking to sell one of the units. Now, there's two main challenges that we're really facing. Number one is the property is tenanted. So how do we get the right exposure for the unit while at the same time respecting people's wishes to self-isolate and not have random people come through the property? Now, we talked about this yesterday a little bit, and you brought up a good point about virtual tours are going to be really important moving forward. But in addition to that, one of the items we've discussed is putting the tenants into an Airbnb or hotel for 5 days while we sell the property, and then offering to have the property disinfected before they move in. The other issue we're having, or the challenge that we're having, is timing. So we're very familiar with Broker Bay, but for the audience, it's one of the main appointment booking services in Toronto. And they released stats earlier this week that showed showings are down 49.7% week over week. That's a significant number. That essentially means 50% of buyers are sitting at home self-isolating. So the question is, do we list now when there's fewer buyers, but at the same time fewer listings, or is there a more opportune time to list the property? So one of the thoughts that we had in the strategy that we're thinking about implementing is to list the property around the 14th or 15th of April. And that's shortly after the mandatory closure of the non-essential businesses is set to expire. Now that might get postponed, we don't know. But our thought process behind that is at the very least, 2.5 weeks from now, people are gonna have had enough of self-isolating. There might be a little bit of cabin fever kicking in. And at the very least, they may be a little bit more comfortable and feel a little safer going out and touring properties. So that's something that we're going through at the moment. There are a lot of restrictions in place for showings at the moment. Condos are not always allowing buyers to come through. Some brokerages are also implementing policies of no in-person showing. So definitely challenging at this time.
Yeah, and so Jordan and I have a listing in Mimico, and I have another one in Innisfil. And like Chris and I listed a place earlier this year, and we had 100 showings in 2 days. And then for our Mimico property, hardly any showings, and Innisfil, no showings yet. So it's definitely interesting times from a sales perspective. Well, let's talk about maybe the buy side. So what's happening? Is it a good time to buy? Really? I guess that's kind of the question a lot of people are asking me. So what's happening and how are potential buyers able to view properties? And Chris, maybe I'll ask you to jump in on that question.
Sure. So when it comes to buying, I think what we're really seeing is whether or not it's a good time depends somewhat on your situation. I was just working with some first-time buyers, and they were very early on in their search. And for them, after finding out that with certain options right now, like some of these buildings, they're not allowing showings, as Pav had mentioned. And one of the things that agents are doing is they're saying, we're not going to let you see the property unless you put an offer in conditional on seeing the property. That sort of clause and that sort of activity for somebody who's bought a property before or has been through the search and done a couple offer nights, that might be something they're more comfortable with. But for someone who's a first-time buyer, they've never owned a property before, that tangible going through the property, making the decision is probably something they're still going to want to do. So I think on a sort of emotional level, whether or not it's a good time to buy is completely down to your experience level. As far as the dollars and cents and the level of competition, obviously Ruth will talk on mortgages and everything like that. But as far as competition, as Pawel had mentioned, Broker Bay, which is one of the leading sort of booking softwares, they had said that not only are showings down 50%, but registered offers, which is also done through their system, they're also down 50%. So for Toronto, which is a market that's pretty much sort of defined by offer nights, 20, 30 offers on any given night, like a lot of competition, to see half of the people who are competing just taking it easy. It really does present an opportunity for those who are slightly more financially limited, like they can't bid up a ton, or they just are, they're not comfortable with bully offers and the fast-paced nature of it. We have seen properties that were good condos being put up for an offer night, and then the offer night passes and there's no offers, or the offer isn't good. I've seen a couple of condos that went from pretty much consistent, $10,000, $20,000 increases since January, now sell a couple units under asking. So is it a good time to buy? I think if you are very financially set and you don't have to worry about your finance side of it, and obviously someone like Ruth has locked you in and you're good to go on the mortgage side, and you're brave enough to kind of say, you know what, I might have to be a bit flexible. I might have to put an offer in on a property before seeing it. I might have to make a decision based on a virtual tour. If you're comfortable with all those things, it certainly can provide a way to get something that maybe in a less competitive setting, or even potentially, negotiate and actually get a good price or a deal on a property. So a deal on a property.
Nice. Yeah. And I think, if I can add to that, I've seen, especially investment properties, ones that are marketed well and are, priced appropriately, are still seeing bidding wars. So we lost out on one last night. Now there's only 3 other offers. Usually that would be 14 or 12. But the ones that aren't priced appropriately or aren't, sort of marketed well are not getting any offers. So, and Jeff, did you want to jump in and talk about this one as well before we get to Ruth?
Sure. Yeah, so I think Chris and you both touched on a lot of points there. Just to add a little bit, I've been looking through all the sales that have been happening this week, and yeah, there's still some offer dates out there. There's some properties that are still selling, but the price that they're selling at relative to the list, it seems reasonable now. Like a month ago, I'd be looking at all these properties and be like, really, it's sold for that much? Who would pay that much for that property? But the homes that sold this week, you know, it seems the price have come back down to reality. So if you're a buyer, you need to get in the market. If you're an investor, you're not going to be paying an absurd amount of money for a specific condo or a home. A few other things, seeing a property, I know is very, very important to a lot of people. One thing I've been doing for my clients is just showing them property that I know that are vacant, especially homes, because if the home is vacant, you can still see it. There's no condo condo board to say, hey, there's no showings, and be tenants there that don't want people to come into their house, and completely understand that. I wouldn't want anyone in my home right now. But yeah, and you also want to look for opportunities out there. So I know a lot of properties that have been Airbnb'd over the last year, they're hurting pretty badly right now. And some sellers of those or owners of those properties might be looking to sell. So you could have some people that are a bit more of a financial distress that need to sell, and maybe you can get a deal over there.
Yeah, I think Jeff, if I could just jump in here real quick, I think Jeff really nailed it there. You know, there's a big difference between listing a house right now in a condo, whereas with a condo, you're really at the mercy of the condo board and potentially tenants that are living there, whether or not you get access to it. Whereas single family homes, really they're at the discretion of the homeowner. So if the homeowner is allowing showings, you have a little bit more flexibility. But in terms of like whether or not it's a good opportunity to buy right now, I think in the next 3 to 6 months, there's definitely going to be opportunities presenting themselves. One of the things we've talked about as a team is, you know, a lot of people took a little bit of a licking in the stock market over the last little while. And I was doing some research yesterday, and there's 29,000 pre-construction units, condo pre-construction units set to come to market this year. Now, some of those people, like as I mentioned, may have got hurt a little bit in the stock market collapse over the last couple of weeks. But number two, some of those people may have been laid off. Are they all going to be able to close on those properties moving forward? That's a large number of units that's coming to market. So I think over the next 3 to 6 months, there's definitely going to be opportunities coming to market. And it's just a matter of having the right people around you to I guess, show you where those opportunities lie.
Yeah, that's a great point. I'll touch a little bit on that when we kind of talk about the investment side too, what I've kind of been telling my investors. But and I want to kind of give Ruth a chance to jump in here just to see, you know, and I guess the question for you, Ruth, is, you know, what are you seeing on the buying side? How's that going? Are people able to close, and are people able to get mortgages?
Yeah. So we all know that we've had a busy couple months here. And so we've got a lot of people in the pipeline right now that are in certain stages of ready to close, deciding if they're going to be able to close. We've been very fortunate with our company. You know, we're a company that do docs up front. So we really gather a ton of information on the front end. So by the time clients are in it with us in the pipeline, there's not too much left to do. We are seeing clients that, you know, have their approval in place, commitments are signed, maybe their appraisals are already done. It looks like these people are all going to be closing on time, and we haven't run into too many issues. The banks are changing on a day-to-day basis though. So my biggest recommendation to anybody that's in the pipeline right now, getting ready to close, you know, get your banks those documents, get your mortgage agents those documents. I know I'm trying to keep up with my clients on a daily basis of how are you doing, how are things, and trying to just keep up to speed day to day on what their job status is, what their document status is. And just to add to Pawel, I mean, some of our clients are relying on their RSPs to cash out for down payment. So have your clients already transferred money out into cash, or are they hanging on and waiting and just watching that portfolio decrease? Are we going to have to adjust down payments for clients? So these are things that are coming to us on a daily basis. And so far we're managing really well. Lawyers are able to close remotely. Appraisal adjustments have been made with the banks. So before, if they had to go in and take pictures of a unit and there are circumstances where that appraiser cannot get in anymore, you know, we have to go back to the bank and say, look, these are our circumstances, and see if we can get conditions to change those. Rate day by day basis, client by client basis, for sure.
That's great. And I know we actually had a situation last night where a friend called me and they closing on a place in May. They can't sell their house right now for what they want. They're not in the city, they're in the burbs. And they're like looking for options. So I connected her with Ruth and with my lawyer to say, like, see if you can move the closing date, see what Ruth can do for you in terms of financing. Because I get it, you don't want to take a bath on the sale of your house just so you can close the property. And again, if anyone has questions, just throw it in the chat below, and we'll answer those. I'm going to jump ahead here and just talk about what's in terms of investors. So what should you be doing if you're an investor and you have tenants? You know, and the question people have been asking me is, what if they can't pay rent? What are you going to do? So I do have a template for a letter that you could send to your tenants. If you want that, please let me know. I'll shoot you an email, send that to you. And they're basically saying, like, you know, A, hope you're doing well. B, let's communicate, you know, how is this impacting you financially? So are you seeing any financial challenges? I know my tenants, most of them kind of still have their jobs and they're okay. And then, you know, you can offer a specific offer. We're offering to our tenants kind of a pay what you can for April and then see how things are going forward. And then, you know, in the letter, we also say, you know, listen, as landlords, we're not allowed to move our mortgage. We already checked with our financial institution. And for now, they're saying you can't bump your mortgage payments as an investor. So we'll see how that changes in the months going ahead. But really just to kind of tell your tenants, you know, listen, we're financially strapped as well. So let's work together, and hopefully everyone's going to be rational humans, and we're going to try and help each other. And then as well, just let them know there are programs that are coming out from the government to help them in terms of income. So there are a bunch of things. I kind of laid them all out in the letter. So if you want that, let me know. I guess the other thing is, are you able to bump your mortgage? So Ruth, did you want to jump in and kind of talk about that?
So there are some options with the banks, and every bank is going to have their own, you know, set of discretionary rules. It's on a case-by-case basis. I just listened to a really good Zoom meeting actually with someone that's head up in Scotiabank, and he's desperately asking that those that have their jobs and can still pay their mortgages, that they do so. So they're not clogging up the phone lines, because they're getting 20,000 calls a day in regards to, what do I do? If you're in a position of, you know, do I put food on my table this month, or do I pay my mortgage? You're in desperate need. And I do have a great PDF. If anyone needs it, they can reach out to myself or Paul. We can get that to you. All the different banks, all the different phone numbers, and some options. So some options for you can be, see if you can skip a payment. A lot of your mortgage options can be looked at online. So skip a payment is one of those options that you can go on, log on online and skip a month, okay? if you qualify for it. You can call your banking institution and see if you can get 6 months of deferral on your payments. You can also think about stretching out your amortization. So if you're somebody that's been paying off your mortgage very quickly and you have a 20-year amortization, you can call up your bank and stretch out your amortization, and we can reduce your monthly obligation. So it's not actually skipping a payment in this case, it's just reducing that monthly obligation for you that can be made up later when things change. And, you know, case by case basis. I mean, I've got some clients that on their rental units, they are getting deferrals on it. And then others, they're saying, no, we'll only do it on your primary property. We're not going to let you defer anything on your rentals. So case by case per client.
And the advice you gave me was great, which was just call your bank, ask them what the process is, and see if you really want to go through that process. And in my case, I don't, because you know they're going to ask some uncomfortable questions. So I don't want that. But yeah, I thought that was great advice.
Yeah, and you can have your clients shoot me an email. I'm free to have. It's a fairly quick conversation with most clients because they've already done the research on what they have. It's just, what are my next steps, and should I go through maybe sitting an hour online with my bank? And like I said, if you have your job and you can pay your mortgage, you really should be at this point. The banks are looking to help those that are in dire need first right now. And, you know, trying to field 20,000 calls a day with the bank is an overload for sure.
Totally. And like, I have US properties too, and I'm sort of like, half of them are called Section 8, where the government pays the rent. So, you know, I think we're good from a mortgage perspective, but I'm anticipating the other half are probably not going to be paying rent for the foreseeable future. You know, it's a different situation because I own in Michigan, and you know, people there are really hand to mouth, month to month. So
yeah.
It's complicated. And I guess Jeff, I wanted to kind of jump in and see what you're seeing with your tenants, and you're managing your expenses right now.
Yeah, so at least right now, all my tenants still have their jobs in place. So I think I already reached out to all of them and said, if there's anything that you need, I'm here to help. So I've discussed some options with them in case the situation arises. Maybe we give them a bit of a break on their monthly rents going forward. I even talked to them about moving their deposit that they paid for their last month, moving that up to cover this month's rent. And then over time, they can top up the deposit 5, 6, 7 months down the road when everything hopefully gets better and whatnot. I also have a few other investor clients where they have some vacant units, and some of them are not like, you know, 100% modern or completely updated. So I said, maybe this is a good time to use time to fix it up. So when things do get better, you can now rent out at a higher rate, because right now there's not that many people looking to rent. And if you do rent your property, it's going to be well below market rent. So good opportunity to try to take advantage to do your repairs, do any maintenance that needs to be done to the property. Yeah,
that's a great point. And we'll kind of get to, I think, rentals in just a minute, just to talk about, you know, what that is. You know, and I guess to add a bit of flavor, I've had a lot of people, I've talked with a lot of clients that have tenants, and you know, there's a varying scale. Some people are, you know, all of my tenants are out to stick it to me. And, you know, I think what we have to assume as landlords is like, listen, most people, and honestly, you know your own tenants well, hopefully you do. And Jeff, sounds like you've had good conversations with them. But you have to sort of, I guess, at this point, unless you know that you have a tenant that's kind of going to take advantage of any situation, let's just have a conversation as humans that are going through a difficult time. You know, let's figure out the best solution for both parties, knowing that, you know, I'm going to be financially impacted and you're going to be financially impacted. And I think it's great, kind of what you said, Jeff, is like, you know, let's help each other out. Let's look at different alternatives, like, you know, pull forward your deposit. I think that's a great idea.
Yeah, like we're all in this together. So I think we just all need to help each other out, and we'll get through this, you know, at some point in the near future.
100%.
Yeah, but definitely agree with you, Paul, that it's important to get ahead of this. There's a lot of false information in the news. A lot of tenants are mistaking the mortgage deferral with mortgage forgiveness. So it's really about controlling the narrative and managing expectations, right? So by reaching out to them before April 1st, when the rent payments are due, letting them know, hey, like investment properties, unless you're actually living in the investment property yourself, and maybe you have a tenant downstairs in the basement, don't actually qualify. So you're still responsible to pay your mortgage, to pay your maintenance fees, the property taxes, maintenance fees. These are a lot of things that people tend to forget. And generally speaking, I think tenants have good intentions. And if you do reach out to them with a letter, like you mentioned, I've done something similar with the properties that I manage. I've sent out emails to all the tenants to let them know, hey, like, this is the real story. We don't qualify. We still have to make these payments. And most of them have come back with positive feedback.
Yeah, that's great. And so, and let me just kind of step back and just make a note to kind of about investing in general. And I think this summarizes it for me really well. I have a group called Lonsdale, and they manage my money, my non-real estate money. I actually moved significant portions to private equity, but I still have some that they're managing. And they sent out, you know, as all investment companies are doing now, a letter just to say, you know, here's what's happening in all the various markets. And then I, you know, went down and I got to the real estate part, and I thought it was really telling what they said about real estate. So I want to read it for you. So what they said is, our private real estate holdings, while not immune to the economic disruption, are probably one of the most secure. Of all real estate asset classes, multifamily residential properties, apartment buildings should be the most resilient. In the very near term, the economic disruption will likely slow rental growth and result in temporary reductions in rental income. Our managers are well positioned and well capitalized to withstand this. Longer term, this is the interesting part, this dislocation can be expected to shake loose opportunities as sellers become more reasonable in their price expectations, but this will take some time. Our managers are ready. So what they're saying is, you know, what I took from that was buyers, get ready, because, you know, talk to your broker and shore up your finances. You know, even first-time buyers or anyone that's not in the market, get ready, because there will be a buying opportunity. And now is going to, well, not now, but soon will be the time.
Now's the time to get your pre-approvals in, though. I mean, it's definitely when people are home and able to gather all this information. Like Pawel was said, if you're a pre-con and you're still 8, 9, 10 months down the road, you might be thinking now, you know, what is that going to look like 120 days before closing? So we're here, we're taking applications, we're busy with that. I'm more than happy to chat with clients in that position.
Amazing, thanks for that, Ruth. So maybe we'll kind of switch and just talk a little bit about what's happening in the rental market. So Chris is actually one of our experts in rentals. So Chris, what are you kind of seeing right now?
Sure. So I think what we're seeing right now isn't necessarily a change in the nature of the rental market, but more just pushing of the groups that we see before to like their extremes. In renting, you typically kind of see two groups from the side, like renters. And they typically are those who are just sort of open to the idea of finding a new rental place. So they'll be sort of perusing the internet, talking to an agent, and they see something that like they'll jump on it, but there's no necessary urge to it. They're on month to month. They don't need to leave their existing place, but they want to. And the second group that we see is those that are under the gun, so to speak. Like they've moved to the city for a new job. They're moving in with their significant other. The property that they are renting has now been sold. Some circumstances push them to need to find a place. And what we're seeing right now with everything happening with COVID is that those two groups are kind of becoming even more themselves. So those that were sort of not in a rush are really not in a rush. You know, they're searching, but they're saying, you know, June, July, August, I'll push it. There's no need to rush. I'm not going to put myself in a situation where there's any unease or uncertainty right now. I'm just going to stick here and I'll kind of delay my plans. And Pawel and I have actually both been running into a situation on the flip side, which is those that are in a rush to find something. We're both working with med students who are traveling from other parts of, one I believe is from Hamilton, and the gentleman that I'm working with is coming from the US, and they had their hospital, gosh, what's it called?
Residency.
Thank you. Yep, their residency, both of them were starting in June, July. And so they have no say in the matter. They need to find a rental. And for those people, because we're seeing a significant decrease in the number of rentals that are being put on the market right now, they're really motivated to find a place and lock it in as soon as they can, because right now we're kind of working with almost a fixed amount of rentals. Like, not a ton of stuff is coming onto the market. So if they find something that they like right now, they kind of have to jump on it, because if that's gone, there's not necessarily that certainty that something better will come up in the next couple of weeks. So some of the things that we're facing with condominium purchasing, you still face that with the rentals as well. Buildings aren't letting amenities happen. Buildings aren't necessarily letting showings happen in the building. You have to be careful as far as wearing gloves, masks, the whole protection thing. The one upside to that is you are seeing landlords also being slightly more reasonable, in the sense that maybe they wanted X, but if you're comfortable with paying slightly under X, if you're a good tenant and you're going to lock something in the next month or two, they're sort of saying, you know what, we don't necessarily know how things are going. Let's just take a good tenant and not sort of play around with it. So from a renter's perspective, that can be a good thing. But the flip side is you do have slightly less options as far as what you can see.
Yeah, and if I could just jump in here real quick,
Yeah.
it is a lot more difficult to find a place as a renter right now than it is as a buyer. At the very least, typically when agents put a property or a condo for sale, they have really good quality photographs. They have a virtual tour up. When you look at these rental properties that are listed on the market, a lot of them don't have any photos, or the photos are really poorly done. They definitely don't have virtual tours. Now, add to the fact that a lot of these buildings are restricting access for in-person showings. It's becoming a little bit tricky knowing what you're or having the right expectation of what you're going to be getting. So definitely a little bit more challenging for renters than buyers at the moment.
So, and I guess you're kind of adding to Jeff's point, which was like, if you're a landlord and you have a vacancy, you're going to have a vacancy, maybe now's the time to, fix it up, make it nice when things kind of bounce back. But maybe B, like, what I usually do with for my landlords and myself is I take great pictures and like virtually stage them when it's empty, so that, you can market the property better. Exactly what you're saying, Pawel. You can market the property when the time comes, right? So taking the time to do it right. If that makes sense. Yeah, so that I guess those are kind of the questions we wanted to answer. I see we do have a question in the chat. So Ruth, I don't know if you can see that, but it's basically asking, are we seeing or anticipating lenders or mortgage insurers becoming more prudent and declining involvement because they don't like the price value ratio or are anticipating a decline in the market?
Okay, well, seeing that the banks are changing every day, I don't know what's going to come up in the future. But when it comes to appraisals, I mean, as an experienced realtor, you guys know your appraisers are going to be looking at the same comparables that you guys are looking at. And that is going to be the same going forward. We might have less sales going forward to compare with, but if all pricing is moving in a forward or backward direction, that's going to kind of set the precedence moving forward. I haven't seen any challenges to appraisals as yet. We've had to do some drive-by appraisals versus a full, appraisal, getting into a home, taking pictures. So lenders are being really versatile that way. So that's very positive. And as far as, the insurers go, I have not seen any difference right now with CMHC, Canada Guarantee, or Genworth right now when it comes to property specific. Again, they're looking at the pool of properties that are sold. They're looking at the postal codes, and they're looking at the same thing you guys are looking at. So your clients, I know they're in good hands with you guys. I've dealt with all of you guys personally. Your clients are very educated on what they're paying, what things are worth, and what I can expect as an appraisal at the end of the day. So, I mean, that's really helpful that you guys do your homework that way.
Oh, and let me ask you this, I guess. I mean, you don't have a crystal ball. You probably don't know the answer to this question, but I kind of feel like when things turn around, governments are going to want banks to encourage people to get out there, to spend, to buy. So, what do you think is going to happen then, if you want to speculate?
Well, I still do have a lot of people interested in the market. And before, all the flights were kind of, stopped to this country, we were getting 20,000 people a month coming here. I don't think that that's going to stop. Ontario is a very viable place for people to come and work. I'm sure new work opportunities are going to present themselves as well. And people are going to take the opportunity to buy. They're going to take the opportunity to buy. Those that have full-time jobs, and we can prove letter of employments, we can prove pay stubs, they're working from home full-time, those people are still able to buy right now. They're going to be able to get into the market, and they're not going to be in the competition that they were a couple weeks ago.
Yeah, I think what you're saying is the truth is this is a healthy real estate market and will continue to be afterwards because people want to live here. We're going to have jobs. We're going to have growth.
Yeah.
So the people that can, and what I've been telling people is, listen, the people that when interest rates truly get cheap, people that have access to that money are going to be buying, right?
Correct.
So make sure you're one of those people.
I agree.
Right?
Yeah, I agree.
Well, and let me ask you another question because, I do work with a number of investors and we are looking at doing some projects that involve private financing, and what I'm told is wait a little bit because some private money is on hold. Can you comment on that?
Yeah, that's a great question. Thanks for bringing that one up. We are seeing some of our privates kind of take a little bit of a pause. So that means there's not going to be as much money out there available for you to, maybe your first option is A lending, your second option is some B lending. And we always know that we've got that private as a foolproof backup at the end of the day. Right now, some of our privates are taking a pause. Some of our big privates, they're still churning money. People are still investing that way. But I think that the tap has turned down the dial a little bit when it comes to private funding right now.
And are they asking for like a higher loan to value or not yet?
No, not yet. I think those that have just taken a pause have just taken a pause for now. And I think they're going to reevaluate once, a little bit of the dust settles. They're kind of, seeing what the banks are doing as well, because although Bank of Canada, like today, has dropped rates again, most people assume that mortgage rates are dropping right behind it. That's just not the case right now, unfortunately. Mortgage rates have actually gone in the opposite direction, and we've gone about 80 basis points back up. I think it's temporary, but necessary to kind of level things off right now. And again, those that can buy are still purchasing.
Yeah, and probably doing a long close, so hopefully those those rates will come down by the time they close, right?
Well, I think my advice is actually a quick close these days, because get your paperwork in, get this thing in, out, and signed and sealed. Of course, if you have a long close, we'll monitor those rates for you. And usually up to about 3 business days prior to closing, if we can access a lower rate with that lender, we will do that for you.
Well, yeah, I mean, the interesting thing is, if you're an investor, does the property have tenants? I think like the property we were bidding on last night, it's kind of turned that on its head a little bit, in that if it has tenants, that's actually probably a good thing.
Right.
In the interim, because you can, buy it, make sure your mortgage is paid. But that's, the other reason why people might want longer closings is when the rental market, does rebound, there will be lots of tenants to jump in there. So if there's any more questions, feel free to put it in the chat. I guess I kind of want to say, in closing, really, we're here to help. If you want to touch base with Jordan or I'll type my email in the chat, and I will also email all of you a copy of this video. And as well, if you want that information sheet, the one Ruth talked about, or the letter to your tenants that I talked about, shoot me an email and I can send that to you. If you want to talk with Chris, Pawel, or Jeff, I'll get them to type their email in there. Or you can just email me and I will connect you with whoever you want. And Ruth, if you can type your email as well, if people have any mortgage related questions, Ruth is happy to help.
Yeah.
And this is part of why we all work together as a team, because we think, together we offer solutions really for everyone and expertise in the various parts of the market. And really it's been great chatting. I want to thank everybody, that came, and everyone that participated. Thank you guys so much. Kenny, want to jump in and say you're welcome?
No, thanks for putting this together. It's really nice to see you guys. I'm so used to seeing, your faces on a weekly basis in person. I think this is really important. And, being willing to help anyone and everyone out there, I think this is the time when we need to share our information, not hold our information in. Because I think sometimes we think, oh, we've got all the information. That's what makes us really good at what we do. And I think that it makes us better by being able to put that information out there, share it, give it, and let's work together through these hard times.
So we will share this recording, and the plan is to kind of do these once a week because things are changing quickly, and it'd be kind of nice to kind of jump in and just talk about what we're seeing week to week. So please, everyone, come back. I'll send out invites for the next one. And if you have any questions, just email me or email any of us, and we are happy to help. And Jack, it's good to see your smiling face there.
Cool.
All right, thanks, everyone.
Thanks, guys.
Cheers.
Stay safe, everybody.
Good seeing you all.
Chat later, Jack.
Talk to you, buddy.
All right, brother.